Earnings season is at our doorstep, and today I'm going to show you a way to consistently make money trading earnings. You might be thinking, how is that possible? There's no way. Who could predict what the number is going to be? Even if you were able to predict what the number is going to be, who's to say that the stock is going to rally after beating estimates? Sometimes stocks beat estimates and they pull back. Sometimes you have huge misses by the stock and it rallies after the number. So we don't know what the number is going to be. We don't know what the reaction is going to be. That makes it a binary event. Well, then you must be selling some kind of option implied volatility before the number. You're selling straddles or you're selling strangles. And then when the number comes out, the option implied volatility collapses. You buy the options back and that's how you make your money. No, I'm not doing that either. I've tried those strategies with, I would say, marginal success, certainly not consistency, certainly not something that gets me excited about doing the trade. You see, a lot of times those moves will exceed the expected range and you get something called tail end price movements. That wreaks havoc on the position. You also have stocks that have a lot of volatility. Stock looks great. It runs up for the first few hours of the day. You're trying to unwind the position and then the bottom falls out. So I don't like those strategies. It's certainly not something that I would consider to be consistent. My approach takes advantage of a seasonal trend before that earnings announcement. And what I'm looking for is stocks that have had a tendency to rally into that earnings announcement once they get inside of the 2-week window. That's what we're going to capitalize on. I've run the statistics and I've gone back over the last 3 years and I've taken a look at what these stocks do once they get inside that 2-week window. In this case, they have rallied at least 9 times out of the last 12 quarters. So let me rephrase that. These stocks have rallied more than 75% of the time once they get inside of that 2-week window. Well, why does that happen? It could happen because there's a lot of excitement in the underlying stock and institutions that are looking to accumulate shares of the stock, they want to get in before that earnings announcement. I don't really care why it happens. I just know that it does happen. And what that does is it gives me another statistical advantage to my trade. I'm always looking for an edge, and this is a nice edge, but it doesn't stop there. I'm going to show you the entire process, and I'm going to set you up with a trade that you can try and execute Monday. So first of all, let's go into Option Stalker and let's take a look at the market. We always have to get our market bearings. So I'm going to be looking at this 2-step backwards, 3 steps forwards trend as being intact with a nice upward bias to the market. And you can see how last week we broke out to a new all-time high. So the market is bullish. I'm going to want to sell out of the money bullish put spreads on stocks that have this seasonal tendency. That's my strategy. Now I do have a search in Option Stalker called Buy into Earnings. All of these stocks rally more than 75% of the time once they get inside of their 2-week window. These companies are all going to be announcing earnings in the next 2 weeks. So this is a really nice list to have. I can use it for day trading. I can use it for some very short overnight swing trades. Really good list. But what I'm going to be doing today is I'm going to be looking for a little longer term swing trading opportunity. So I'm going to use my custom search engine to help me find these setups. But yes, absolutely, we can and we do trade these stocks right here. So I'm going to bring up custom search and then I'm going to describe what I'm looking for. First of all, I want good option liquidity. So we're going to go with a rating of -2 is excellent. And we'll go with weekly options. I want to have weekly options that I can pick from. And then I'm going to select pre-earnings bull. Let me talk about this a little bit. This search already has that database of stocks. So if I put a very wide date range here of say April 3rd to July 3rd, I'm going to get pretty much every stock that conforms, and I'll see all of the stocks that have a tendency to rally into their earnings announcement. Well, I don't want to go that far out in time. I want to keep it very short term, but I do want to give myself an opportunity to trade at least a couple of expirations. So if I pick a start date of, let's say, April 19th, that gives me a couple of option expirations that I can sell. And then my closing date, let's go not too far out. Let's go to a May 3rd date. And so the reason that I didn't want to go too far out in time, the reason that I did go at least 2 weeks out is so that I have a couple of option expirations that I can choose from. The reason that I didn't go too far out in this date is because I want to make sure that that seasonality is still in play. So as we get closer and closer to that May 3rd date, let's say that the company announces on May 1st, as the options expire, that seasonal tendency is going to be fueling a move higher. If I go too far out in time, I won't have that working in my favor. I'm going to click scan, and this is going to be my list of stocks that I can work with. And you can see that we have a fair number of stocks to pick from. Now, I could go through and I could click through all these results, and that wouldn't take me long. Actually, this wouldn't take me more than 20 minutes, and I would probably have 5 to 10 really strong candidates. And I've already done that. But as we get closer and closer to earnings season, this list is going to grow exponentially. Well, then what I can do is I can start looking for other signals that this stock might be gaining traction, and I can use other variables like strong versus S&P 500, mark that on a daily basis. Perhaps I want to start looking for stocks that had heavy volume today and closed above their prior day high. Anything that I can do to whittle this list down will help me once earnings season starts to climax, because I could have 80 or 100 stocks announcing in just one day. If I'm looking at all the candidates over the course of a week, I'd have hundreds of symbols to search through. So yes, we can certainly use the upper portion of the table to help us narrow that field. With any search, I always want to cast a wide net, and then I want to draw it in and draw it in so that the list is manageable. And by adding additional variables, I'm actually increasing my probability of success, because the underlying stock has more and more desirable characteristics that I want. So what I did was I went through this list. It didn't take me long to knock through this. I'd say probably about 10 minutes or so. And there were about 4 or 5 really good candidates. But I'm going to click on MGM because that is one that I selected. And so we're going to take a look at this trade, and we're going to see how we might structure an options trade. Before I do that, very important for us, let me first go back to the market and say that if the market were falling apart, you would not want to be selling out of the money bullish put spreads. You might want to do the contra search, which would be weakness into the earnings announcement, and you may want to sell out of the money bearish call spreads. But right now, the market looks good, so I feel very confident selling out of the money bullish put spreads. Secondly, the thing that I want to mention is that when you are buying options, you want to make sure that those options span the earnings announcement date, that they expire after the earnings announcement date. Why? Because I'm long premium, I want that surprise component. Those option implied volatilities are going to remain elevated through that earnings announcement date. And so if I'm in the trade, even with the intentions of getting out before the earnings announcement, those options are going to be very resilient. They're going to hold their value very well. If I'm selling options, which is what I'm doing in this case, I want to make sure that that spread, that those options expire before the before the earnings announcement date. So in MGM, what I need to do is hover over the E. And there I can see that 4/29 is the date of the earnings announcement. So what I'll want to do next is I'll want to bring up my option chains, and I'll want to take a look at some of the different options that might be available to me. And so I'm going to look, the 9th would work, the 16th would work, the 23rd would work, because the 23rd expires before the 29th. So now what we're going to do is I'm going to move this off screen temporarily because I want to overlay some major moving averages with any bullish put spread that I sell. I am always looking for technical support. That technical support can come in a couple of different ways. It could be a horizontal support level. So let me click GTC. That would be a horizontal support level. It could come in the way of an upward sloping trend line. I'm going to click GTC. I'll drop an alert line that looks like this, just so that you can see. That is a support level. You can see that that also coincides with the 50-day moving average. So we could have horizontal support levels, we could have upward sloping trend lines, we could have major moving averages. All of these points right here of support are areas where buyers are likely to come in. And so the more support levels that I have between the stock's current price and my short strike price, that gives me a higher and higher probability of success. So I've got lots of different support levels that I can lean on with MGM. And when I'm looking at selling out of the money bullish put spreads for this particular strategy, what are the characteristics that I'm looking for in a stock? I don't want a stock that has already run to the moon. Why? Well, that's because it has a lot more downside risk to it, and maybe that seasonality is already playing out in the stock. So let's look at a bad example first, and then we'll come back to MGM. I looked at MMM, and here you can see, well, this stock has already been on a really, really strong path higher. And you can see that there's technical support right here on that breakout. But look at how far that technical support is from where the stock is currently. It's way away. What I want to find is I want to find a dormant stock that's just kind of been waffling around, really hasn't done anything too exciting, but I know that it's going to have that tendency to grind higher. And all I'm looking for the stock to do is to tread water or move a little bit higher. I don't need it to rally. Sure, it'd be nice if it did, but what I need to be careful of is I don't want a stock that can pull back. This stock has a pretty good distance that it could pull back to get to that support level. And look at how far below the major moving averages are. There's the 50-day, there's the 100-day, there's the 200-day. So I prefer nice quiet stocks. Let's say that the earnings announcement were coming up and this is the pattern that I had to work with. Oh, I love that. Look, right down in here, you could sell maybe even down to the 100-day moving average, and you've got 1, 2, 3, 4, 5, 6 different touches, which confirm that there's really nice support at that level. Yeah, that'd be a fantastic setup with the earnings coming in another week or two. You could bet that that stock is going to start inching higher. So if we take a look at MGM, it's really been pretty boring. It hasn't been on anyone's radar. Yeah, it had a good day on Friday, but for the most part, hasn't done anything too exciting. I've got this nice upward sloping trend line here that I've drawn. I've got the 50-day moving average. This will also be horizontal support here. 1, 2, 3 levels of support. So I am going to be looking at that $36 strike price as a strike that I would like to short. Now, again, the one thing that we need to keep in mind is that I don't need the stock to move higher. I just need the stock to be able to sit right where it is and let time tick, tick, tick away. And I'm very comfortable with that price level. So what I'm going to do is I'm going to bring up the option chain and we're going to see if we've got some options that might come into play for us. And we'll set this trade up. You can see here that I've got the April 23rd expiration before the earnings announcement date. And I'm going to go in and I'm going to click the $36 put because we're going to be selling that. and I'm going to click the $35 put because we're going to be buying that. So let's review the trade. April 23rd expiration for MGM. I'm going to be selling the $36 put. I'm going to be buying the $35 put. When I have a dollar between the strike prices, I typically like to get a 20-cent credit for this, but I don't think that I'm going to be able to get that big a credit. So I need to adjust that and go down to a 15-cent credit. Now you might be thinking, how could this possibly make sense? This guy's bringing in 15 cents, but he's risking 85 cents on the trade. And so let's go through that math right now. A dollar between the strike prices, but I get to apply the credit that I receive, which is 15 cents. So for this trade, I have to put up 85 cents, and I'm getting 15 cents. If I were going to calculate my return on this trade, 15 divided by 85 is roughly about 17.5%. So this trade will take 3 weeks until it expires on April 23rd. So in 3 weeks, if this trade works out, I'm going to make a 17.5% return. Wonderful. So if I did, let's say, just 10 contracts on this, I would make $150, and I would have to put up $850 to do so. It's not a bad return at all. Now, if you're thinking, why would I want to risk 85 cents to make 15 cents? You wouldn't want to do that if your probability of success was 50-50. There's no way you would ever do that trade. What if it were much higher? What if it were 90% win rate? What if it was a 95% win rate? Would you do the trade then? You probably would. In fact, I know I would, because I think my probability of success on this trade will even be higher than 95%. But that doesn't mean that something can't go wrong. MGM could have a fire in its biggest hotel. Who knows what? I'm just saying that if I am doing this type of trade and spreading my capital over many similar trades like this, I am going to have positive expected values, and I am going to make money consistently doing this strategy. So let's take a look at another factor that we have coming into play here. The red dotted line represents a 1 standard deviation move in the underlying stock. The blue dotted line represents a 2 standard deviation move in the underlying stock. You can see that MGM is at $39.70. So to get down to the strike price of 36, it has to move almost $4. Well, as soon as I am 2 standard deviations out of the money, and I'm actually more than 2 standard deviations out of the money, that has a 95% probability of making money. There's a 95% chance that MGM will not visit this strike price by expiration. Let's say that the market falls apart and everything's horrible, and the market's selling off the next couple of days, but the major moving averages are still intact, so it's just another part of that 3 steps forward, 2 steps backwards process, and the stock drifts down to this $36 level and it kind of waffles around for a bit. I'm not going to be worried about it because I know that the closer and closer that this stock gets to that April 29th earnings release date, the stronger and stronger its tendency to rally, which, by the way, here's what the stock did the last earnings announcement. See, it's doing a whole lot of nothing, just kind of moving around. And then all of a sudden, boom, 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 right into that earnings announcement. Well, this could be the start of that type of move. That's why I want to take advantage of this trade right now. So that's the premise behind selecting this strike price. Could I go closer and get a bigger credit? Yes, you could. If that's your personality and you think that you want to try and squeeze out a $37 dollar strike price, you could. I'm showing you my personal preference and the risk reward that I want to take on this particular trade. Pete, could you go out and buy calls on this? Folks, you could do anything you want to do. It's your money, it's your trade. Yes, you could do everything and anything under the sun. As soon as you're buying the stock, as soon as you're buying call options, all the probabilities and everything that I've shown you kind of fall to the wayside. But yes, and that those shorter term types of strategies for traders who are very nimble, yes, you can absolutely do those types of strategies. I'm showing you a swing trading strategy because the point is there were probably another 5, 6, 7 stocks that I could do exactly this strategy with. You put the trade on and you let time whittle away at those positions and they expire worthless. That's the type of video that I'm trying to show you right now. And when I say consistently make money trading earnings, that is the key. Consistency. And that's why I put that in the title. So I'm sticking to this type of strategy for that reason. So let's review all the moving parts to this and conclude the video. First of all, what did we start with? We always start with the market. The market is conducive for the strategy. We just had a breakout to a new all-time high, so market conditions are stable to bullish. Excellent. That's the first key to everything that we're doing. Secondly, we're taking advantage of a seasonal pattern. We found stocks that like to rally once they get inside that 2-week window before the earnings announcement, and they've done so more than 75% of the time. We defined a date that gives us a few options expirations to choose from, and we kept it pretty tight because we want to make sure that we have that seasonality working in our favor. Also, I want to keep these spreads very close, meaning I don't want a lot of time until expiration because I want to take advantage of accelerated time premium decay. I want to roll these positions over, want to roll them over, want to roll them over, not just in MGM. Once MGM is done, I'm done with the trade. I'll be looking for the companies that announce 2 weeks after that, 2 weeks after that, 2 weeks after that, so I could keep rolling this strategy for at least 3 or 4 times, and then earnings season will start to wind down. And then I'll be looking for post earnings plays. I'll do that in another video. So we're going to keep it very short term so we can take advantage of time premium decay so that we can roll these positions. These are the stocks that we want to focus on. This is the list. By the way, if you're watching this video, you can go click through this list and you can find all these stocks, bring up the chart, look for opportunities. We homed in on MGM and we liked it because it was not too far out of the gate. So the stock has not moved dramatically. It should at least be able to hold this level or float a little bit higher. We also have defined support levels. We have an upward sloping trend line. We have the 50-day moving average, and we've got a horizontal support line. So we have that working in our favor. From a mathematical standpoint, we also have an edge because we've selected options that are more than 2 standard deviations out of the money. There is a 95% chance that the stock will never visit $36 between now and April 23rd expiration. And we always want to make sure that we are selling options that expire before the earnings announcement date. Trading is all about check boxes, and that's why this custom search engine is so nice because as I mentioned earlier, you cast a wide net and then you draw it in. And every time that I mark a variable that's favorable, it increases my odds of success. And you can see that in this particular trade, I have lots of check boxes that are marked. And that is the key to consistently making money with your trades. I hope that you enjoy this video. If you really like to learn more by reading and by watching and looking at charts, I also will have a link to this very same content in the comment area and in the description of this YouTube video. You can click on that link and then you'll be able to go back and reference that article as often as you'd like and read up on this specific trade. This is something I'm going to be doing over the course of the next few weeks. If you'd like to learn more about the Option Stalker software, there is a 2-week free trial. You can also find a link to that in the description area. Thank you. Happy Easter. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.